If you're in your 20s or 30s and planning for a comfortable retirement, one of the best moves you can make is to invest early. To live well, you'll need substantial wealth, and for most working people, investing is key. Starting early significantly boosts your wealth. Here's a great example. Let's say you decide to start investing $500 per month and earn an 8% investment return. If you start at the age of 25 and continue that strategy until you're 60, you'll have $2.16 million at retirement. Starting at 40, you'd only have $341,000. By starting early, you are setting yourself up for success. Today we'll be looking at some of the most important assets and investment decisions you can make while young. 1. Real estate. Real estate has long been seen as a valuable asset, and for good reason. Unlike stocks, it tends to have less volatility, with property values steadily rising over time. Many are familiar with the challenge of skyrocketing home prices, but this consistent increase also means reliable returns. For example, Zillow reports that the largest real estate market in the US has doubled in value over the past 5 years. So, despite the high costs, now might be a good time to consider real estate as an investment. 2. Mutual funds. While stocks are often the go-to for investing, mutual funds offer a safer alternative. Over the past decade, large-cap funds have averaged a 13.36% return, according to Value Research. Unlike individual stocks, mutual funds carry less risk, and with consistent saving, you could become a millionaire in 10 years. Warren Buffett advocates for low-cost index funds, which require no research since they track a specific group of stocks, like the S&P 500. If Buffett recommends them, they're definitely worth considering for your investment plan. 3. Education. Your 20s are the ideal time to build a strong foundation in financial literacy, as it's the easiest time to acquire new knowledge. This is crucial for long-term success, but not all education is an asset. Some learning may be more of a hobby and less likely to generate income. Focus on fields that align with your skills and offer strong potential for success. Prioritize practical strategies like budgeting, investing, and understanding markets, and use this time to plan for your financial future. 4. Livestock. Believe it or not, pigs, cows, chickens, sheep, and goats are all considered assets. Specifically, animals raised for future use are classified as capital assets, much like stocks. The expected returns from investing in livestock can be quite favorable, making it a worthwhile consideration. If you're concerned about the risks, remember that investing in livestock supports 1.3 billion people who rely on these animals for their livelihoods. The demand for livestock is unlikely to decline as long as people continue to eat, which doesn't seem to be changing anytime soon. 5. Land. Investing in livestock requires land, which is also a valuable asset. Purchasing 100 acres of farmland can generate annual returns, allowing for reinvestment in more land while continuing to produce for years to come. The U.S. Department of Agriculture reports a stable amount of land for crop growth, indicating that now is a good time to invest. Over the past year, land prices have risen by 7%, not including revenue from crops, and this upward trend has continued since 2007, making land a solid option for building wealth. 6. Startup business. Investing in a startup business in your 20s offers unlimited potential for returns. Even if it's not the next Amazon, it can still bring significant rewards. You don't have to start the business yourself. You can invest in others' ventures for equity, becoming an angel investor or participating through crowdfunding platforms. Before investing, research the founder and the company's story. Alternatively, you could work with a venture capital fund, but this requires meeting specific qualifications and a minimum investment. 7. Treasury bills. Treasury bills are vital investments for all ages, especially when you're young. These short-term, government-backed debt instruments help finance expenditures and manage the money supply, with maturities of 90, 182, and 364 days. They are ideal for covering expenses like tuition or rent, allowing you to invest your funds and cash out when they mature. This aligns with the principle of asset and liability matching, buying an asset to cover future liabilities. With guaranteed returns and minimal risk, Treasury bills are a solid investment choice. 8. Growth stocks and dividend stocks. Your 20s and 30s are ideal for taking calculated risks, as you have time to recover from potential losses. Investing in stocks is a great way to allocate funds to high-risk, high-reward opportunities. Growth stocks are expected to outpace industry averages, generating more sustainable cash flows and revenues. In contrast, dividend stocks belong to stable, mature companies, making their prices less volatile. Including dividend stocks in your portfolio is wise, as they can provide a consistent income stream over time, assuming the companies perform well. 9. Annuities. An annuity is a contract with an insurance company that provides periodic payments either immediately or later. You can purchase it with a single payment or multiple premiums. Some annuities help save for retirement, while others provide retirement income. Deferred annuities delay payouts, while immediate annuities start payments right away. The main types are fixed and variable, along with indexed annuities. Annuities are often used for retirement planning and marketed as tax-deferred savings products, but they may have fees and high commissions, sometimes over 7%. 10. Your health. Taking care of your health is one of your most valuable assets. Investing in your physical and mental well-being boosts energy, productivity, and resilience, enhancing your performance in all areas of life. A healthy lifestyle reduces the risk of chronic diseases, lowering healthcare costs and preventing financial burdens. Additionally, prioritizing health can lead to increased longevity, allowing you more years to enjoy life and pursue your goals. By making mindful choices, like exercising regularly, eating well, and managing stress, you improve your quality of life and increase your potential for success. If you found this video useful, be sure to like, subscribe and turn on notifications to not miss our future uploads. See you in the next video.